What is going on, guys? It's Friday, September 13th. Friday the 13th. Rollover week. We got all kinds of stuff going on. It's been a hell of a last 6 days, last 2 weeks for me, actually. Last week I had a great week. This week, pretty good. And that's my cat meowing. He's an old man. He's like 15 and a half years old. Or he's turning 15. Oh, hello. Excuse me. So, full transparency, I had a red day yesterday, hit daily loss limit $1,250 in one of my accounts. That's my daily loss limit on that account. Then a couple other accounts I traded, hit 50 tick stop loss on those accounts. So across the board, I was a red. Didn't want multiple accounts to get too red, so that's why I split it up amongst a few of my accounts, one trade on each account. And if I made a green trade on that on an account, I was going to give myself one or two more stabs at it and see if I could continue to bring up one of the P&Ls. But unfortunately, the whippy action yesterday got me, and it was a red day. But you know what? It's all good. It's been a great 2 weeks. We are at the point now for me going into rollover that I do my charting again, right? I'm due to chart everything all over again. So I have a weekly up here, just to kind of get it in, put it into perspective. I was on my daily looking at some things. So we mentioned this, bullish into a trading range, rotated below the range, slingshot up. Where we got our first move, pullback, measured move here, reached the fourth range measured move. Remember, 2 and 4 are the strongest. As you can see, 2 acted as we broke, support, came up, came down, then it acted as resistance, right? When we broke it, acted as support. When we broke down, acted as resistance. Now, the commitment to trader report, the COT report, excuse me, I don't really look at it right now going into rollover. Reason being is because we're going to see a lot of new positioning going on, and new positioning is going to mess with the numbers, right? We also have massive, this past week we've had quite a bit of data between Friday into today. We had non-farm payroll last week, and this week we had CPI. We had some other stuff going on. So sometimes the COT report is just positioning going into those data releases. Also, we had positioning here, and then the shorts added on their way up, and then when price started moving down, they started to cover into their shorts, right? If they started to add short here and added all the way up, their average could have been somewhere in the middle. And then once price broke down, that's where they started to buy back, and make profit all the way down back into cost basis. And then from there, now that we reach cost basis again, we bounce. Maybe they went long, finish, or maybe they were still short, right? But they covered and still had some additional shorts to cover here. And then added some more shorts and then covered back down here. I'm sorry. So they were short, adding shorts on the way up. Their average is moving up. They start covering. Price bounces again back to where they might have had an average, and then started covering back on the way down, right? That's what we were seeing on the numbers. So now that happened, we got to wait for new positioning. That takes time. They're not going to just load into a position overnight or within 1 week. It takes sometimes weeks for them to build positions in order to see the numbers on the commitment to trader report and then correlate it to the charts. So right now, it serves zero purpose for me. That's why I haven't been updating it. I had my thesis based off of it, and the thesis played out. From here, it's just stand by and wait, especially because we have the rollover occurring. We're going to be having people selling the September, buying the December, buying the September, selling the December. Some people aren't even going to be rolling. They're going to be settling in cash. So we'll have to figure that out when that occurs, and that's going to take a little bit of time. So I'm expecting, an increase in open interest leading into this, and then a decrease right after the rollover occurs. All right, so we're going to zoom all the way out into the weekly time frame here, and we're going to go all the way back. Right? Let's go all the way back. All right, 2012. Don't really care much about this. I do this once in a while just to see. Look at this. We had some sort of a trend line, trend channel or something up here. Do we have an overshoot? Who knows? Let's make it a little bit better here. Does any of this match up? That matches up. Yeah, that's okay. Right? Bounce off the midline. I just do this to start looking. Just start. Am I missing something? Is there some sort of long-term or higher time frame pattern or higher time frame setup that I am absolutely missing? Because when those higher time frame setups, when they trigger, they're beautiful. All right, so weekly, that could be it. Who knows? I do like connecting my tops first, right? I have this circled. We're going to get rid of this, right? This was the 2022 high. This was the 2021 into 2022 all-time high at the time, which obviously when we pulled back to it was a buying area. I had that on a chart. I'm going to leave it on the chart. I'm just going to take that circle off. What I like to do is I like to connect the highs first sometimes, then connect the lows. That's pretty nice right there, honestly. See how far back we can go with this. All right, not bad. Don't mind that, but I will take this into consideration that it could be something like this, or it could be something like this. Right? Could be all the way down there. Somewhere in this area might be where we're looking, but we'll cross that bridge when we get there. It also could be one of these where we see... Nope, definitely not that. All right, so we're going to leave this as is. We'll cross that bridge when we get there, but I like that. And the reason why I like that, 2020 COVID time, right? I think 2020 COVID time is going to be a lot more important than we think. All right, we're gonna leave it like this. Excuse me. All right, so from 2020 we had a massive rally. This is the 2020 COVID recovery rally into all-time highs. Back then, 2021 to 2022. This is beginning of 2022 here, right there when we started to sell off. So end of 2021. So all I did was copy this move on the weekly. We're going to try to make it as clean as possible because when we're on the weekly time frame, where we want to be damn near perfect. Because if not, excuse me, I don't know what's wrong with me today. I think my wife's sick. She's been coming down with something, so. All right, right there, I like that. So the reason why I do that is because, if we're off by a little bit, that could be like a good 50 to 100 points on the weekly. So we have our first move here. And then we have our second move. Well, we're on that. Let's go ahead and get this lined up perfect here. It's damn near perfect. All right, so that's our first move. We have a pullback into a trend line, right? We don't know if this is confirmed up here yet because this is our first move up, but we're going to consider that because I charted the top of the range, or I'm sorry, the top of the channel first, and then I dragged it to the bottom. I did it opposite. Now on here, let's go ahead and chart this. Get this pretty much perfect here. Let's see, a little bit higher. Okay, there we go. Now we'll get this. See if we can get that. That's pretty good right there. That's perfect. All right, so this would be our weekly range measured move. Sorry, we have so many ranges in this market. I keep saying range measured move. All right, so this is going to be our weekly measured move on the trend. I have this, and I'm going to leave this here on my daily chart because this is going to be something that is going to be significant. If we reach this level, it's going to be extremely significant, right? And this kind of plays into the whole blow off top and then a retracement. When I say retracement, this was our retracement 2021 into 2023, almost 2023, right? 2022 to almost 2023. October of 2022, we recovered, and that was continuing our bullish move, right? So we're going to take this, and we're going to paste this, move it up here, and let's say we reach the range measured move. If we reach the range measured move, obviously, we're going to come back and hit this. Why? Because that's how wide the channel is, right? But doesn't have to hit the range measured move. It could hit right here. This could be the move. Right, we could have barely missed the range measured move. Excuse me, I keep saying range measured move. Measured move. We could have barely missed the measured move. When I say barely missed, I mean we're talking 2,980-ish, 2,950, or 20,950, and we're up here at 20,200. So that's a 200-point move, which, I mean, look at this weekly candle here. This past week, we rallied from 18,400 up to 19,500. So this is a 1,000-point move. Oh, no, this is a 2,029, 20, yeah, yep, 2,000-point move. So this is a 2,000-point move. Sorry, a little tired here. So, I mean, we could easily do that in a week. So this, as of right now, this is the high, so we're going to have it charted here as the high. So there we go. I like that. So I'm going to leave this here for now so I can have my, these are equidistant pullbacks. I don't need to put that on my chart, but there you go. You got to move up, pull back, measure, move, and then an equidistant pullback. Let's see if we can find any other pullbacks, right? Here's our COVID pullback. You know, almost the size of this pullback here, which is almost the size of this pullback, which is almost the size of this pullback. You know, this one, this is going to be kind of freaky here. Look at how we wicked right below and then recovered. That's I like that. Now here we go. This would be down here. We have a swing objective down here. Do I think it's going to get hit? No. We've rotated. Don't really want to keep this on my chart. I've had it on my chart for a while. I'm going to take this off. Insignificant. This swing has occurred, so I'm taking it off. I just want to clean things up going into the next contract where NinjaTrader will correlate the prices. It's going to keep all of my drawings on here, but it's just going to change the prices. So I'm going to have to actually grab my drawings and just adjust them, right? But I want to have them on my charts based off of this price action moving forward. So we have our, this measured move. We don't need this anymore. This pullback is based off of Not sure what that pullback is based off of, but if we had this pullback here, that would bring us down into this level at 16,300, which is a significant level. But we're going to take this off for now. We're going to leave it as it is. We're going to try to keep only the most significant things, right? So here we go. We got the weekly chart. I have this done. This is pretty much all I'm looking at on the weekly for now until we make new highs, which we might blow off and do whatever coming up into rollover. Let's go to the daily chart. Check that out. All right, daily chart. It's going to keep my weekly stuff here, right? So it has my weekly stuff here. Let's go ahead and zoom this in a little bit. All right, we have a trend line coming down here. More or less a trend channel. So we're going to go from the high to this wick and then bring it over to the bodies. Hi, Shadow. Hey, buddy. All right, so I have it coming down to the body. So I have wick to wick, this wick here, and to the bodies, right? Going through the bodies. Notice how the midline is getting rejected here. Let me close this. So what I find what's not significant now is this green candle here. We have a move down, a pullback, and we have yet to make a new low. We have yet to make a new low. This right here has not confirmed, right? We have not confirmed any of this yet. And that's why I put it on my chart, because I want to sit there and look. Okay, we have a pullback. So we have a low, pullback, new low, pullback, new low, pullback above, trap comes down. We didn't get it. Ultimately, we know sellers want to take out this low. So we know sellers want to take out this low. So I'm going to remember that. Sellers want to take out this low. Do we actually have some sort of a trend channel resistance here? So far, but it's not really breaking any structure. The structure is already broken. Now, reversal for bulls is going to be above this level. Above here is confirmation of the reversal or the continuation. And I say that because if you remember market structure, you have a low, pullback. So you have a lower low, lower high, lower low, lower high, lower low. If this was going to continue structure, you would need to continue structure. We're not continuing structure. We pulled back, we broke structure. This level is where we broke structure. I know we charted this before with the trap. This is where we broke structure. This is structure breaking. 155, good. Okay, so we broke structure up here, and then we broke back down. The only way this would continue to be a bearish move is if we came back down and continued structure, right? That's the way I'm looking on it, because lower low, lower high, lower low, lower high, lower low. Okay, maybe a higher time frame. This is a low, a high, and a low. But the only way to confirm bearish trending structure is to come down and break this. We need to create a new low to continue bearish structure. We bounced, came back. Now we're creating what appears to be a high, a higher low, and then when we break here, so this was breaking the bearish structure, right? We broke the bearish structure, failed to make a new low. Now when we break this level here, this is going to signal that we now have a bullish structure above this level. So if price continues higher, and we continue higher up here, let's get rid of this. If price continues higher and we break this, now we have a low, a higher high, a higher low, a higher high. That would be bullish structure. And then from there, what are we looking for? Just to take out these highs and then continue the bullish structure, right? Just continue the bullish structure. Simple, right? That's market structure. That's what I'm looking at on the daily chart here. So where we're at now, is it completely... Is it going to go up? Is it going to go down? Who the hell knows? Market doesn't really care. Market's going to do what it wants. We just need to react to what the market is presenting. So in the short term, I have this level here at like 19,711. I have this that has to break and hold above like this. Break, hold above. And then we can continue. If we break this, now we have confirmed bullish structure. Remember, the actual weekly structure is bullish. Remember, we're going higher. Remember, this is our measured move up here. So it's a bullish move. This is a pullback. This is a pullback. And now we're on a smaller time frame looking at market structure, right? That's what we're looking at. So daily, I got my daily plan in place, right? I know ultimately sellers want to continue the trend. You know, if sellers come down here, sellers break here, they continue the pullback, or we could say the weekly time frame pullback, continuing intermediate bearish structure. Intermediate, right? The most immediate structure, or the overall structure is bullish. The overall trend is bullish, and this is just a pullback, right? So far, the intermediate structure is bearish, but we broke it, and then confirmation of the bearish structure being over and the bullish trend continuing is if we break up here. That's what I'm looking at. If we break this 20,028. Okay? Confirmation of the bullish structure continuing is if we break above there. Ultimately, have to take out the highs to continue. Otherwise, I hope this isn't too much. Otherwise, this could just create a gigantic freaking range. Okay? But that's just, you know, these are options. These are different scenarios. So daily is out of the way. I know, I'm sorry that took like 24 minutes, but I really needed to go over that. So, you know, for my own sake, because I was shorting the market the other day. And why? Because I'm like, oh, you know, we're reaching some sort of a trend line area. We're a little bit too high up. That is what it is, man. Who cares? Market's going to do what it wants to do, and I got to go ahead and I got to remember that stuff sometimes and then reevaluate. So there we go. Got the daily out of the way. Hello, Shadow. All right, we're going to go to the 60-minute. See what we got going on here on the 60-minute. This is a very interesting area here on the 60-minute. I had a range charted previously here, and we were rotating. We're going to go back on the 60-minute time frame. We're going to go back about 100 days on the 60-minute. I have it. We were rotating a bit up here, and then we broke down. So I had 2023 on the daily time frame, right? I had that. Remember, I said right here 20 to break the bullish structure, or 2032ish, right? Breaking the bearish structure and confirming the bullish structure. Breaking the bearish, we broke the bearish, sold off, but we didn't make a new low. If we break here, we're confirming continuation. This is where we're going to confirm continuation at 2032. So at 2032, around this area here, what do we got? What's up here? 2076. So if we break here, breaking the highs will confirm continuation for bulls. That's what I'm watching right now. We had a sell-off here, pull back. This is the trap area, right? Pull back, lower low, trapped above here. Anybody potentially buying up in this area got trapped. So the above the midline, I'm expecting sellers to try to continue to defend this area. So above the midline, because this is the trap you're seeing on the daily time frame, because that's August the 2nd, and then this is where we were trapping the other day up here. Oh, let's see, August, was it August the 2nd? Yep, this is August the 2nd, so everybody above here in that little range area potentially trapped. And if you don't believe me, we can go ahead, we can copy this. It's going to be a little bit messy on here, and we can paste it, right? Everybody above this midline is potentially trapped. And we'll go ahead and take this gray area, put it here. Remember we said that. Everybody above this line, because we have our low, our pullback, our lower low, and we pull back above this swing, and then we wanted to go down and take out these lows. So everybody inside of this gray area potentially trapped. So what does that mean? Inside of this gray area, there's a lot of sellers. A lot of sellers are here. Where are their stops? Above, right? Their stops are up here. So let's go ahead and take this off, go back to the hourly so we can continue our analysis. This is the boring stuff of the market, but it's the necessary stuff of the market. Breaking the highs will confirm continuation for bulls, and then we're going to expect, so I'm going to look for bulls to stop out above. Look for bulls to stop out above. And I'm going to expect sellers above the midline. Expect sellers above the midline. This is no longer. So, we're just cleaning up. We're doing spring cleaning here, fall cleaning, house cleaning. And then above that, we have this level, 2156. This is like, I'm going to call this I am going to call this level here 20,166.50. I'm going to call this level our bear's last stand. Because I believe above this, I just got to go ahead and zoom in. We have an imbalance, which we might fill very quickly up to around 20,330. Yeah, we might fill that imbalance up there. So anywhere in this midline, I'm expecting sellers above the midline. So we're talking right now, not into next contract, right? This could gap any direction going into next week's contract rollover, probably Monday. We're going to see a gap. So I'm expecting sellers above that midline. And above this midline, I'm expecting sellers to try to defend, right? Defensive sellers. I'm expecting defensive sellers above the midline. And then bulls are looking to break out above this level, run stops, looking for bulls, bears to stop out above, sorry. Looking for bears to stop out above. And then this is our bears last stand, and I believe we have an imbalance here, so we're going to look at this, and this goes back to July. So we're going to have to load a lot of data on our 5-minute chart. But that's what we have going on the hourly. Now I know my hourly sentiment, right? Now I have my hourly zone. So when I'm moving around on my chart, I can go ahead and say, okay, yep, we're expecting this area. Now I'm zoomed in, right? I had my daily chart charted where we have, you know, this whole 9. And now I have this area up here zoomed in, and I have specific levels inside of here that I can trade off of. So that's our hourly. We're going to zoom into a 5-minute. 5-minute, as you can see, we're holding the bottom of that area. Let's go back. Let's see how far I can go back without messing with my... Okay, we're at 100 days. Let's do it. So that's expecting the sellers because anybody above this gray area was potentially trapped, right? So all these buyers came in, and that's what fueled that last move down. We got to go back to July over here. Got a little bit of a gap here. That was previously filled though. All right, this is what I'm looking at, right? This strong move down. Do we have any imbalances in there? And I look to confirm imbalances on a 5-minute or a 15-minute chart. So imbalances to me, anywhere where there is no price action. So this is an imbalance area here. And I look for imbalances to just small little imbalance here. But that wick, I do not like this wick. See this wick up? I don't want any green candles coming up, and I don't want any big wicks coming up. So I'm using this wick up here to this wick down here. That's an imbalance for me. This, we don't have any imbalances. Do we have any imbalances here? Yeah, we have an imbalance right here. Not that strong though. This is a stronger imbalance. I like this imbalance. It's a strong move. Good. I like that imbalance. Do we have any more imbalances? Now, imbalances, notice how, you know, some would say that this is a fair value gap. You got this bottom of the green candle or the wick or the low of this green candle to this wick here. This is a fair value gap. I do imbalances, which is pretty much the same thing. It's just a little bit larger, if you will. It's an area where no price action came in. It's an imbalance. There was an imbalance of sellers in comparison to buyers in this level, right? The buyers did come in, so this is the area where there's the buyers, right? So we had an imbalance down, and we had some buyers coming in. There's no buyers anywhere above here. There's no buyers, so it's an imbalance of sellers in this area. So in that, I look for that to push up, test the midline, break, and continue. So those are my imbalances for now. This is 25006. That looks like a big area there. But anyways, let's move this over. Bears last stand. This is imbalance, and this is an imbalance. Let's go ahead and bring these over. And unfortunately, on Monday, Tuesday, I'm going to have to rechart all of this. Not rechart, I'm just going to have to move it over on my charts and readjust, because all these levels are going to match up on the next contract. They're just not going to they're going to match up. They're just not going to correlate to the actual price, because these ranges and all that stuff are going to stay at the price that it's on in September, not into December. All right, so remember I said bear's last stand? So I have this line here as bear's last stand, which I really do like that level. This is going to be bear's last stand. Right, this level. And I have that as bear's last stand because this is an imbalance. When bears get stopped out here, I'm expecting sellers to last stand, right? So if we came up there today, or whenever, we could gap through all of this. Let's just be honest. We could gap through all of this and none of this could matter, because that's how the contract rollover works. But bears last stand, expecting bears to try to sell, if they're getting stopped out, get those last ones that try to sell here, sell here, sell here, pushing. And then, if bulls can hold above it and they hit this imbalance, that's where I like to see that big push up. That big push up real quick to really fuel the move. And then, we continue, because look at, there's not much price action on the hourly. It's all zoomed in price action. So I really like that. So I'm liking where this is going right now. It's unfortunate, but you got to do this. So now that we know, midline, we might actually hit this today. This is expecting defensive sellers above this midline. And if they fail and we break above here, looking for bears to get stopped out, bulls to hold over. And then we're going to break above. Breaking the highs will confirm continuation for bulls. So breaking up here confirms continuation, but they have to hold, right? We can't just say, oh, they broke it, they're going to continue higher. They have to hold this level here. And then we're expecting the bears last stand above, right around this area. And then if they break this imbalance to get filled, grind higher, couple little imbalances to get filled on the way up, and then we just continue to move. That would be pretty nice. But now we got that going, right? We have we're rocking and rolling. We have our 1 hour, our 60 minute, and now our 5 minute. So that's what I got right now for the hourly, the 60 minute, and the 5 minute. Now we're going to zoom in on my tick charts, lovely tick charts. Let's bring this over. Ignore all this. This is where I was looking for a breakdown yesterday overnight. And I was throwing some stuff on my charts to try to figure it out, see what's going on, and then go from there. I was looking at a potential range yesterday where we were chopping, but this is just close your eyes, buy, and have a wide stop loss with close your eyes, buy, have a wide stop loss, all while sizing down, and you could have made money, right? If you usually trade one mini and you traded one micro, you could have just bought a micro pretty much anywhere and had a really wide stop loss, and you would have made money. I mean, it's just how it goes. So let's look at some channels. Is this our structure? I mean, we're just going to keep trending higher. I like to use the first move of the structure. This looks like a range down here, like we were rotating around some sort of a range, and then we broke out, right? So I'm not going to include these lows. I'm going to keep these lows as a potential longer term area. So I'll have this trend line here just in case, because that's hell of a distance, right? We could cover that in a day. That's no problem because we covered this in a day. But we're just going to have that there. It's too far away for me to trade off of, but I'm still going to have it on my chart, right? I don't want time to go by and forget about this. We also have levels, you know, we have this, it looks like this entire area here could be some sort of, let's bring this. Looks like this entire area here could be some sort of a buying area. Wide area though, way too wide for me to just slap anything. I have to get specific setups and specific patterns. This spot here was our BORT, our breakout retest, and we held. This level is significant for me. I know there's a lot of buyers there, so I'm gonna push this over. This is our breakout retest, right? See how it's significant? We're making higher highs. When we pulled back, trap location. You know I love traps. This is our market structure. Hard to see. What did we break below? We broke below this swing, this swing, this swing. All those sellers down here, last minute sellers, got stopped out when we pushed up. Weak-handed sellers. But this is convincing. One thing I do want to mention, it's not mentioned enough, and it really destroys people. And it used to destroy me all the time. We're going to say that during a bullish trend, pullbacks pullbacks are very convincing, right? What do I mean by during a bullish trend, pullbacks are very convincing? Bears look like they are taking control. But when that occurs, stop. Right? During a bullish trend, bears look like they're taking control, but when that occurs, stop. I should say, if bears look like they're taking control, stop. If bears look like they are taking control, stop. Right? We're gonna, when that happens, we're gonna want to reevaluate. Reevaluate market structure. Let's go over that real quick. I know this is long and drawn out, but this is actually very, very, very important, right? As of September 8th, we started to make higher highs and higher lows. Higher highs, higher lows, all the way up. And we're going to chart this. We have higher highs and higher lows all the way up. Look at how beautiful this is. Is this a bullish trend or a bearish trend? Look at that. When you look at trend structure, this is actually just slightly above. When you look at trend structure, higher high, higher low, higher high, higher low, higher high, slightly higher low, higher high, never broke, higher low, higher high, higher low, higher high. Is this bullish or bearish? It's bullish, right? This is 100% bullish. Now, when I say that, during a bullish trend, pullbacks are convincing. Pullbacks are convincing during a bullish trend. If bears look like they are taking control, stop. Reevaluate market structure. Okay, now from here we made We had a big pullback. When we had the big pullback, what happened? Let's make this chart, make that wide, right? Can you see that? Let's see if we can see that on OBS. Yeah, that's not too bad. Maybe make it a dark red or bright red, maroon. Zoom in a little bit. Higher high, higher low, higher high, higher low, all the way up here, right? Pullback. Look at how convincing this pullback is, right? It's probably fast, very fast. It was fast because this move here took all damn day. From this green area to this green area is 3 a.m. to 3 a.m. So this move, remember, when bulls are in charge and they're not doing a short squeeze, it's draining. If you have, like me, this is what I got to say to myself. If you're like me and you have ADHD, ADD, which you could probably tell from when I make these videos, when bulls are in charge, they take forever, right? Look at the next day. When bulls are in charge, they take forever. We moved from 18,336 up to 18,931. So about a 600 point move took 1, 2, and a little bit, right? 2 days, a little over 2 days to go 600 points. Because when bulls are in charge, they take forever, right? I know that sounds annoying, but it's the God's honest truth. Look at this. Bulls are in charge, they take forever. When bears are in charge, they just dump it. Or when bears are making a move, it just dumps. Pullbacks are aggressive. Pullbacks are aggressive during bull markets. Pullbacks are aggressive during bull markets. We moved from 18,930-ish down to 18,549, so we moved 200 points in an hour and a half. We moved 600 points in over 2 days. 600 points in over 2 days. We retraced almost the entire, we retraced what? Half of the move? We retraced, hold on, 553. Oh, no, I'm sorry, 400. Where's my math? 9 minus 5, 4. Okay. So in 2 days, we moved 600 points. In 1.5 hours, we moved 400 points. Because when bulls are in charge, they take forever. When bears do something, they make it happen quickly. So why do I say that? During a bullish trend, pullbacks are very convincing. If bears look like they are taking control, stop. Reevaluate market structure. I say that because as bulls are slowly making this move higher, you're getting, if you're someone that likes a short, or if you like the immediate action, you're thinking, this doesn't look like it's going to continue. This doesn't look like it's going to continue. And then when bears do this 400 point sell off, you're like, yes, market's dumping. We're going to go freaking straight down. Okay, so we break this. We broke this market structure. Okay, fine. Come down here. We break this market structure. Okay, fine. But all we did was trap all these sellers below these two swings and then ripped higher. That's why we got this nice little squeeze up. When bulls are in charge, they take forever. Bears do it quickly. So remember, if bulls take a long time to continue their move organically, that's normal. So this is normal for bulls. This is a normal pullback in a bull trend. The only way we could go ahead and say bears are in charge is if we get a pullback and a dump. And we'd have to break this low. Right? Does that make sense? Bulls take forever. Bears pull back. And that's what gets a lot of these shorts trapped. Is because it's convincing. Don't get convinced until you reevaluate market structure, get that pullback, and then continue in a bearish structure. You have zero bearish structure here. Where is your bearish structure? Nowhere. See what I'm saying? There is no bearish structure. You had a pullback. And then what happened? Remember I said, when bulls make fast moves, it's because it's a short squeeze. A short squeeze. All these shorts got squeezed. All these shorts in this area got squeezed. Now what happens? Remember, when bulls are in charge, they take forever. What does that mean? Don't get convinced of a sell-off. Don't get convinced of a pullback. Don't be the one that shorts down here. Wait for the pullback in market structure. There will be plenty of freaking setups when bears are in control, I promise you. Plenty. But for now, when bulls are in charge, they take forever. Okay? I say it that way because maybe, when you're wanting to short and thinking this is going to continue to short, you hear my dumbass voice telling you, if bears look like they're taking control, stop, reevaluate market structure. Wait for that pullback and that continuation lower. So anyways, now that we got that out of the way, that was something that I needed to go over. So this is a very key area here. We have this area right here, which previously was our BORT, B-O-R-T, breakout retest zone. From right here. Ooh, shit. Our breakout retest zone. We broke out, retest, held above it, and when we came back down for that final retest, we ripped. After we trapped in all those bears. So I like to take the most immediate move, this is the most immediate move, and then start drawing some sort of a structure off of that. We have our squeeze, or potentially a leg, right? We have potentially a leg up here. Are we going to get another leg based off of this tiny little pullback? Up to around 20,000? I don't know. Can't really say it's a pullback yet. Bullish trends tend to be a little tricky. So we are just going to sit here and watch this grind higher. This is not my type of market to trade off of, but it does present some awesome setups. When you have a V bottom, we're going over a lot here, so we're just going to keep going. When you have a V bottom, this is a V bottom. Usually a V bottom follows with a squeeze. So we have a squeeze. Anytime we have a V bottom, I look for this specific setup. V bottom. I look to see if the buyers are going to grind higher. If the buyers are grinding higher, I do one thing. I don't short. I screwed up yesterday. I tried shorting. It's okay. I'm human. What I should have done, and what I love to do, is I like to connect these highs, then bring it down to the low. And the reason being is now I have clear, solid levels when we hit this trend line on the pullback for our first test for traps. Anytime we break below here, what's going to happen? Squeeze, and then what was my annoying voice? When bulls are in charge, they take forever, right? Blah. When bears pull back on the bullish trend, it looks convincing. Don't be convinced, and don't be the ones that get trapped below these swings. If you are going to go bearish, you need pullback, continuation, and ultimately take out the lows. Because otherwise, it's just a higher time frame setup. So when bulls are in charge, they take forever. Bears are going to be very convincing because this is going to take days. This might take a few hours, or like we saw before, an hour and a half. And then that's where you look for the squeeze in the next leg. And that's why I haven't drawn, a leg, because that's going to be my first leg up. Or what I like to do is I like to say this is the first leg, and then we grind in, which is the second leg, and then this is our third leg. Then that's where I go for the measured move. Right? I don't really consider this grind part of the move. I consider it the second part of the move, because this is going to be the pullback here. This is what I look at, right? The pullback, and then this is the second leg. Then that third leg on these types of trends, I look as the measured move. So the break, the squeeze leg is what I copy and paste for the measured move. Okay. Go ahead and rewatch that if you want. But I like doing this because I get to go over my setups. I get to really refine my skills. I think that's the word, refine. I don't know. My English is not too great. Who cares? I'm a visual person, as you can see. All right, so squeeze, grind higher. So somewhere in here, if you can't see that this is a grind higher, I don't know what to tell you. But so far, we're grinding higher. Now, grinding higher, what does that mean? That means we have clear areas. Obviously, buyers are defending here. Clear areas to trap in sellers here at this trend line. Could always zoom this out to like a 10,000. And then you can find your clear areas to trade off of. As you can see, pullback, higher high, pullback, higher high, pullback, continuing the grind. So right here is not really too much. This might cause the stop run down. But what I want to see is I want to see these swings start getting taken out. Like I said, take them out. Have the bears convince all those rookies that are down here. Those that are shorting down here saying, damn, we're going to make all time, we're going to go back and take out these lows. Fine, let them do it. I'm going to look for a specific pattern, a specific setup to continue this next move. Don't get trapped. Bulls take forever. Bears will pull back aggressively, try to convince you that they're going short, that we're going to continue short. And then, we might get that next leg up. But this is setting up very nicely. I hope. You know, if we, let's say we trap down here, this gives us a nice move up. We just got to be patient. This is where the market tests your patience, because I've done this before in the past, and I'm going to just talk about it. Maybe it's therapy for me, who knows. But how many of you have seen this happen? You get chopped up in here. You get chopped up. The market squeezes and you're not in. You missed the squeeze because you either blew up your account, you hit your daily loss limit, you did something stupid, right? You did something stupid and you missed this squeeze. So now you have FOMO. Now you're like, shit, I'm not going to let this market make money without me or continue without me. I'm going to make money on the way up. There's a lot of money to be made. So what happens? You just start... You're like, this is going to either pull back or it's going to continue long. Whatever you do, doesn't matter. But you get chopped the hell up in this grind. Then what happens? You screwed up, hit your daily loss limit, missed this move, and then you get FOMO and you screw up and you keep destroying your account as price grinds higher. Now you have 2 days of daily loss limit, maybe 3 days, you have your first day, your second day, maybe your third day daily loss limit, you blew your account, maybe you didn't, but you're losing money. Then, like I said, it's going to take bears no time to pull this back and break some swings. And then what happens? As bears are pulling this back, you're going to catch FOMO. You're like, this is the move. We're going down. I'm in. But guess what? You're not going to find an entry until somewhere down here. And you're going to be like, nah, that's all right. We're going way lower. And then what happens? You get stopped out, or maybe you make some money on the way down. And then you just get greedy and you're like, yeah, we're going lows. We're going down here. And then what happens? You get stopped out and you're like shorting this all the way up. And you're shorting it all the way up. And you keep getting stopped out until we break highs. And then you're like, no way. And then the measure move happens. And then you just destroyed yourself for 1, 2, 3, 4, 5, however many days. Right? So this is a pop and grind, a V bottom, and then we grind. This is a textbook setup. Do not just slap short here. Wait until you see sellers exhausted and buyers taking back control. Then look. Now you know how far you're looking for profits on your runners. Right? Wherever we pull back to, copy and paste, drag it. That'll be your runners. Right? Okay. Now we got that out of the way. Whew. I know I'm talking a lot. We'll go back to the 4,000. I'm obviously going to adjust this based off of, if we make new highs on the grind, that's fine. We're just going to readjust, reevaluate. But I have a clear area where I'm going to be looking to pull back and buy if I get the right setup. All right. That's our 4,000 tick chart. This is how much analysis I do, and this is what I say to myself. And I love making these videos because I really hammer it home into my brain what the hell is going on. So this was our London high, London low yesterday. Let's see what we got today. Like I said in my previous videos, I use a London high and a London low. I'm not trading, but I'm still going to do this anyways because it's great to just do the same thing over and over again. London high, I have around here at the 19,479 area, and my London low is around the 19,424 area. So we have a 50 point range during London session. Very tight range, right? We chopped all day yesterday, and then we broke out a little bit. Chopped all day yesterday. We broke out, retested this level here. We retested and then continued higher. So we know that there's buyers in this level, and they're going to be defending this as they come down. But anyways, overnight, yesterday, that was that. Overnight, we just chopped, created some sort of a range, and then pulled back, played off of the London high and London low around the open. And that's why I love the London high and London low, because if we fail to break above and hold above the London high, I correlate this on the footprint chart to show that buyers are running out of momentum and there's no aggressive buying. Then I look at Bookmap and I'm like, wow, there's really no support from the bulls, and I'm seeing liquidity added below. Then that's where I look for my short. Clear target, one, going to be the middle area of the London range, or the London high and low. Clear area is in the middle of it for targets. Scale out there. Most of it here, and I barely will leave a position past this unless we just disrespect and continue. So there you go. London high, broke the London high at the open. Data candle at 10 o'clock, consumer confidence, consumer sentiment, or expectations. Consumer sentiment sold down, came up. What did we do? London high, came down, broke down. Where did we go? London low, came back up. This is why I love the London high, London low on these types of days, because then we're starting to continue higher. Where we go? Back down to the London high, and then continue. So today, not really much going on. We're just continuing the, we have some of these wider areas. So, that's kind of what I would trade off of. Not much, more of a choppy range rotation type of day. Tough. Right now, it's just buy the pullback. That's it. Buy the pullback. Because right here, what do we have right here? We have, looks kind of like a, pullback. They're trapped below here. Then we have stops below here. So if they run these, if it doesn't immediately stop out and come back down to London low, we might just dip by. This is going to be the Bort level. This is our breakout pullback. This is Bort. This is the Bort level. And I say that, we broke new highs. Anytime you break new highs, you start looking for a little bit of choppy continuation or the pullback. And if we do pull back, we're pulling back to the Bort. I look for the Bort, the breakout, retest. Right? So that's what we're looking at now, because this is clearly sellers trying to short, to continue to break this down, and they failed. And this is what? A stop run. This is an intraday short squeeze. All these sellers coming in here just got squeezed on the way out. Right? So let's go ahead and just, if you can do this. There you go. You got your V bottom into the grind. Now intraday looking, same thing, right? You can do these patterns. We might come all the way down and retest this zone here, but you got these areas here that are potentially trapped. So if sellers get very convincing and we break below here, continue higher. We also have this level here. But this is our breakout retest level. So as long as this holds here, I'd be looking to just buy. That's all we got today, right? So there we go. That is my analysis. I am glad I did that, so I don't have to do it this weekend. I just will have to readjust my charts. So Video is an hour and 9 minutes long. Sorry if anybody's watching this. I'm going to post it anyways just because why not? So I can go ahead and review it later. But I want to go over my entire top-down analysis moving forward. And then go from there, right? That's it. Happy rollover, happy Friday the 13th, whatever you want to do. Next week, rate decision. We're waiting on some more data to get released. So trade safely, man. I'm telling you. Don't get caught on the wrong side. There's going to be a lot of good moves that come after this. Just be patient. Just be patient. All right, guys. Good luck. I'm tired. Gonna go take the dog out. Trade safe. Bye. And my cat's saying bye too.